Despite the market slump for U.S. stocks, Bitcoin is holding up pretty firm around $19,000. Is that surprising?
Kind of, but what we're seeing right now, I think, is a lot of loss of confidence in leadership, generally speaking. And so we've obviously seen a lot of currencies depreciate pretty by a ton against the dollar. And what we would think is maybe that money is going into Bitcoin and that's what's kind of holding it up. And for a long time, we've been saying that Bitcoin could be a good inflationary hedge, that it could be kind of like the new digital gold. And that transition may be happening right before us right now. So I think that there was a little bit of a surprise, but I've been paying closer attention over the last couple of months. And what we've found is Bitcoin tends to be the leader, not the lagger. So this could mean a bounce for the market heading into next week. But it could also be that transition where people are starting to say, hey, like, I don't trust politics. I don't trust government. I want to put my money somewhere else. And the first place they're going to go is Bitcoin because it's the most well-known, well-established when you come to the fiat currencies.
Would you advise folks to invest in Bitcoin or the Great British Pound right about now?
I would definitely lean toward Bitcoin if we were, those were the only two choices. Yeah, I think that Bitcoin in general is looking better and better. If we can get back above 20,000 and hold, I think that there's a long-term buying opportunity there. Of course, like anything else, there's just so many unknown things that are going on right now. And we could see a breakdown as well. But the more recent stability in Bitcoin is definitely promising. And I think that it's going to cause a little bit of confidence in Bitcoin in general, especially relative to everything else that's pretty much in free fall right now in this binary market. Fortunately, Bitcoin's not being binary with everything else right now.
Yeah, it does seem that Bitcoin is stuck between this $18,000 to $20,000 range. I wonder when you might see a catalyst for a breakthrough, or the opposite, when Bitcoin might bottom and head even lower.
I think it just comes down to consumer confidence in general and risk appetite, right? So consumer confidence is waning in the public markets. So we're seeing the stock market just have a rough year this year. We're seeing currencies all over the world devalue against the dollar, primarily because the Fed doesn't seem to be budging on increasing interest rates or anything like that. So I think that the consumer confidence in the market in general is, hey, I don't want to be here. But they still want a better rate of return than like a 3 or 4% per year yield. So they're going to look elsewhere. And that's where something like Bitcoin could be advantageous. And all you got to do is pick up a little bit of momentum. And when the masses start to follow, you can see it really run up. Now, if on the other hand, if everything just breaks down and everyone just loses confidence in everything, then it can get real bad for everything real fast.
Well, what kind of headwinds do you see ahead if that confidence is lost? And if that happens, what would be Bitcoin's bottom?
I think that headwinds, it's the same story that we've been telling. That it's the inflation issue, but inflation is more than just a one-legged stool. There's three issues right now. There's supply, that's getting enough chips to enough factories. There's also a crops issue, right? We have droughts and we have Russia, Ukraine, and so we're not generating enough crops to fill demand. And then you have the stimulus that occurred over the last couple of years that they're trying to rein in right now with increasing interest rates. So those three things right now are headwinds against any investor. And if Bitcoin was to break down and hold below 17.6, I would expect it to fall pretty fast to 14,000. If it can't hold there, we could see 10,000, unfortunately.
10,000, pretty low. All right. As a wealth advisor, what kind of trends are you seeing in terms of activity from either retail and institutional at this time?
I think that generally speaking, we're just seeing fear. And we're seeing a little bit of denial from the standpoint that a lot of people are like, oh, no, it's going to come back. But I think that there's slowly this realization that, hey, this could get a lot worse before it gets better. And so we're getting we're getting a lot of calls asking, hey, how is our portfolio set up again? And fortunately, we're tactical, so we have a lot of cash right now. And, we're looking at things like Bitcoin, we're looking at things like Microsoft, even Apple, if they go down a little bit further. But anytime that we buy something, we're always making sure that we have a predetermined reason to sell. That's to just take a loss if we have to, or take a profit on the way up. And so I think that, generally speaking, retail is just looking for more activity. They want to know that their advisor is trying to protect them. At the institutional level, we're seeing more cash, we're seeing less equities in general. And so just the whole mindset around risk in general is, people are scared. I mean, for lack of a better term, they're scared.